we'll start with that. Not bad. Meh. I'm with you. Meh. Meh. I mean, it's not terrible. Sam's good. Sam's the winner. Sam wins. Yeah, kind of frustrating. Had a bear put on, a nice little hedge on. Okay. That's what hedges do. They help with things like this, of course. Yeah, Clint, it's interesting that not many people emphasize that. If you can see, for me, it's in my plan. There's a section dedicated for hedging as part of risk management. If we don't have a hedge as part of our risk management, it's incomplete for me. That's amazing. Where are we at? We'll give it one more minute. We're light today. We're a little light on numbers, so I think we'll see people pop in. Much to discuss. Everyone is hiding. It's the ostrich strategy. You put your head in the sand and wait it out. Oh, okay. Let's get cracking here. We have everything we need. I'll elaborate on hedging while we start, Sam. That's a great place to start. Let me run through the intro and let's just talk about that. Okay. Officially welcome to the Market Watch Group Weekly Market Wrap. I am Scott. It's a little past 3:15. We are getting going. Here are the disclaimers. As always, not advisors, not brokers. We don't give guidance or recommendations. It's for illustrative and educational purposes only. What are we going to do today? We're going to talk about today's market. We're going to revisit our posture before we go. Carrying trades. You might be stopping out of anything that you put on to say, hey, I'm going to wait to see if this reestablishes its footing. That makes sense. You probably already stopped out of some. We'll look at what's coming next week by way of economic news. We'll look at our list. We'll wrap up section 4, but we'll kick today off with a little discussion on hedging, because it's the kind of day that makes sense. You can see we're gonna have a down day. We're down 1.5%. We're off the lows, and we could come more. But I mean, look. Unless we get all the way back up, halfway up this candle, then for me, it's sellers. You can see that it's 120 my time, 3:20 Eastern. Average volume is 45. We're at 44. If you're wondering if we're going to get another 5% in the next 40 minutes, the answer is yes. You can get 4 million shares of volume in the last 5 minutes. So yeah, no concern, right? No concern. There is concern with the volume. We're gonna drop our. You're gonna notice now that we had this day with this volume, and we're like, all right, if we can hold, everything will be okay. And then this morning we're like, maybe it's going to. And then we're like, bing. So I would imagine as we broke through here, it's where maybe you were stopping out of some trades, or possibly even back, sooner than that. You might have had this day getting you out. But now what? Well, here's the deal. That's our last major low. we from the S&P 500, you can see that it had a little bit of a maybe, but when you look at the candles, it never actually went. So we got from here up to here, and now the sellers came back in, and even though it came all the way back down into the oversold territory, we're still above a 50% retracement, right? Still above a 50% retracement, which is still a bullish retracement. We're still actually, if you notice, if you think about this from a Head and Shoulders, we're right back to this old place. Inverted Head and Shoulders, that is. So none of this is like, oh man, we were so wrong. Oh, we thought it was getting more bullish. It is going to slow us down. It is going to regress. Let's think about it. We said from perspective of posture, okay? But from a hedge, let me go to the VIX for 1 second, Sam. Down here, if you put a hedge on, it was very, very proactive. It was very much preemptive. That's a tough one. For me, the first sign would be like, hey, if we see something like this where we're like, whoa. Normally, we hedge when we see higher lows. Things like this. If you go back here, things like this. We have very specific signals that, in fact, are if we see this as one test and then it comes back down, then this low would be higher than that low. And what's our fear? Our fear is that another one of these escalations is developing. So when I see a signal that shows that type of a setup, that's an automatic hedge for me. I'm like, boom, it's on. I like to have automatic hedge signals. Prior to that, anytime that they have a low VIX and you have a lot of bullish trades and you see something where you're like, oh, I don't know about this. Yeah, you can put on a bear call spread, a bear put spread. You could buy some puts for a few days. Where if you do it and then something like this hits, right? So there's various types of signals that we will talk about in an ongoing fashion. The most consistent one I look for is a higher low. And a break of a consolidation line, right? So you can see we had a consolidation. It broke it. That's the kind of thing that's going to have me think, ooh. So am I still thinking that? Even if, let's say next week on Monday, Tuesday, Wednesday, the market starts to get a recovery. Should we trade it? Yes, I still think we're going to have setups and we should still look to trade that bullishly. We're still going to be overall bullish. But if I see this thing happen, then I'm like, oh, that's reminiscent of what we saw last year in September and October, where all of a sudden the market, turned around on us. So, yeah, I think we need to be careful. How do we be careful? What does that mean? Be careful. Be careful. That means tighten stops. Potentially, that means hedge. How do I hedge? You can buy a bear put spread. You can sell a bear call spread, or you can buy a put. Those are probably the three ways that are most commonly used. The easiest is buy a put, but time's working against you. So if you want it quick and easy for a few days, buy a put. If you want a little bit more entrenched, then you might look at a spread. So hopefully that helps, but that's the kind of thing that as you explore it now and you're like, okay, I think I get it. Then you're like, nope. I start writing it down and I'm losing it. That happens to me all the time where I'm like, oh yeah, I understand. And then I go and I'm like, wait, no, I don't. I thought I did, but now that I have to write it down. So that's the kind of the great hedging is a great conversation ongoing for Tuesday, Thursday Trading Foundation sessions. anytime you're like, hey, I'm carrying like 7 trades and I don't like the way this is looking. What do you think about a hedge? Yeah, great question. Love it. Hopefully that helps. Okay, let's talk about our market. Let's go back to SPY. Absolutely. For me, you guys, I feel like these sessions go best when your questions guide a lot of what we do. Let's start here. Is our score going to drop? I don't know. We just raised it up to a 1.5. And then we dropped, again. Yeah, I might take it back a quarter of a point. What do you guys think? I thought we might find support levels somewhere in this region. And the fact that it got back below the 50, I think we probably should suck a quarter point out of that. That's what I'm leaning. I mean, it's still positive and it can still find a positive trend. But if that's the trend it finds, that's 1.25, right? Yeah, I think that's going to lose a quarter. Okay, what's going to happen to our weekly? In order to know, we should look at a weekly. Oh, I don't want us to get stuck in a habit of whipsawing, but we did break back through the red. But we have a long way before we would come back. I'm going to give it another week before I suck out of that one. I think even though it is back below the red, because it's the first day or the first week, I don't want to be like back and forth on this. I think I'm probably going to leave that one alone. Let me know if you guys are going to do something different. Volume is definitely dropping. We just got, volume is going to get a little life sucked out of it. We did get a positive day here, but now we have negative, and now we're going to have another negative. 30 minutes left, and we're now at average. We only need this to get to 48 million. 48 million. Are we going to get 2 million? Of course we are. Of course we are. So this is now stale. These three, which is interesting because these three actually tell a bullish story. Maybe not, I don't know. Let's just see. That's positive. That's negative. That's positive. Oh, that doesn't actually count. I don't think that one counts. Let's see this one. 63.2, 62.6. That didn't actually get it. So those two cancel out, and they're stale. We don't even care about that. So what do we have? That one did not qualify. Positive, negative, and going to be negative. So we're going to have a 2 sellers, 1 buyers. I'm going to make that a 0. Sanity check. We're going to start here and end here, which means we do have a positive slope. So a 0 is acceptable to me. I think that'll be a 0, which means it will drop, right? Oh, no, it was already a 0. Perfect. I think I was thinking about maybe raising that to a quarter and wondering if I should have, and now I think no. Okay, perfect. That's not bad. We're going to lose a quarter point here. Not anything with long term. The volume is going to still be a 0 for now. Major market. I think that could maybe the Dow starting to show a little more than the Russell, but we'll see. Sectors, where maybe that could pull back if we saw a surge in consumer No, in utilities and staples, consumer staples. Maybe that would get pulled back out. We're definitely losing points on the VIX. That's for sure. Definitely. Why? Because we have a higher high. We broke the consolidation. We have a higher high. I don't think we have anything else yet. We just have the higher high. So I'll probably take a quarter of a point back to 1. So I think 4.75, maybe 4.5. What does that tell us? It says, don't think the sky is falling yet. That's what I think. Thoughts? Or is the sky falling after all? You tell me what you think. I think we're going to lose at least a half, maybe 3/4. Is that so detrimental? That's not even what we gained from last week. So I feel like, hey, you know what? It's not great, but we're still in the force, still bullish. Does that give me license to still trade bullishly? Well, yeah. Let's go through and talk about on what. On what? Apple. Apple is still a yes. Yesterday, I was like, ooh, that looks like it could be good. Nope. Today, oh, it looked like it could be good. Nope. Is Apple like, oh, look at the sellers, they own it? No, it looks like it got up here. Now it's pulling back. Higher low, still establishing. We're at the same level we've been for the last 2 days. Not 3 days. Stochastics still down, starting to turn. So if I see something like this, I would trade it bullishly. I would say, yeah, that looks good. This is still on my bullish list. Hasn't even broken the 50. Could it? Yes. And if it does, then we reevaluate. Be water, my friends. Aflac. It's a very bullish stock. Just made a new higher high. Now what? It's in a flag. And if it pulls back to here, it's a pullback. And it could come all the way back into its 50. And I'd still be like, yeah, that looks pretty good. Is it a trade right now? No. But are we like, oh man, this market's fundamentally changed. I'm no longer bullish. Not yet. I'm not. Tell me if you think I need to be, and I'm just not seeing it. I don't think that's the case. It could be. It could be. What do I know? My pen is freezing my system again. Hold on 1 second here. Come on now. Close the program. All right. I do need to draw though, so I'm gonna pull it right back up. Okay, Amazon. Yeah, Amazon tried its best. Did you take some profit? Did you stay in? Did you get out? Ended up booking a little, then getting out at break even with the rest. Let me know your thoughts. Honestly, it hasn't broken support. But for me, oh yeah, right, Cap. We're not saying preemptively bullish. So when you say not going to get bullish, I'm assuming you mean you're not going to take new bullish trades. Remember, trading posture, market posture. My market posture is bullish. I'm bullish. Am I taking new bullish trades? No, my market posture, my trading posture is neutral. It's like, whoa, you don't need to. I'm not doing anything right now. But if Amazon holds support and turns, definitely I would take it again. Okay. AXP. Now look at that. AXP is now taking out, not this low because it was all the way to here, but it's testing. If it's going to become a trade, it's going to do it here or not at all, right? So in the next little bit, or it's not going to happen. Bank of America, BK, Bank of New York, Mellon. pulling back. That doesn't have a huge amount of volume. If it pulls back to 65 and finds some support through here, yeah, still viable. BLDR, look at that, still viable. Viable on Monday, possibly. If I get a bullish candle, my stochastics is turning. Support has held at old resistance above the 50. Like it. Citigroup, not a fan. I'm actually bouncing Citi. I don't like Citi as much anymore. I think we have way better financials. No need. Carrier, still a setup. Still a higher high, higher low. And again, am I trading this like, oh, I think it's going to bounce? No. I'm saying it is still at the same support level it's been for the last couple of days. If it gives me the sign that support is holding, then yes, I would, right? Then I would. Let's move this to Caterpillar. And it's getting deep. We don't like that to get too deep. Colgate-Palmolive. We know our defensive stocks are going to be definitely at play once again. So, yeah, I'm looking for a flag starting now. Chipotle. Chipotle has a viable looking signal right here. Right? This has a vibe. Maybe we'll come back and look at this. We'll see. Not for Cap. He's like, I'm not taking new bullish trades. That makes sense. Let's see if this has a hike and ashy for us yet. We could wait for that. Oh, Monday. Maybe we'll do that with this Chipotle that we've been watching. Because I can get a nice snug stop in there. And then if I get a breakout from these highs, 51.69, 5 points, 61.69. Yeah, back to these old lows. That's a nice little trade. That'll do well. Costco, not yet, but still viable. Nothing's fundamentally changed. It still only dropped from 912 to 875. That's hardly anything. Carvana. Ooh, Carvana. We were like looking good, looking. Oh, too much. A little too much. Maybe. We'll see. Here's the Dow. Let's see if we can tell from a Dow now. Here's the Dow, still above the 50. Here's the Russell. I don't know. I think we may lose that quarter on the major market. So I think we will be at a 4.5. Still positive though. Let's go back to Fastenal. What do you think, Miguel? Channeling? Did you stay in? Came all the way back to this old support level and held. Okay. It did hold support. That's for sure. GBTC. Bitcoin's down pretty heavy today. About 5%. Gold is down. Not nearly as much. Just kind of looming sideways at its resistance. GM, I like GM. GM is in the midst of forming a handle in a cup and a handle. Right? So what does that mean? It means that it's holding up. There's enough big, nice things that are holding above 50s, that are holding at higher highs, higher lows. We're not giving up on this thing yet. Google, that's why we didn't trade it. We were wondering if it was even going to hold support. It didn't. Tech is getting beat up today. It's getting smashed. Goldman Sachs down. There's better that we can find. Home Depot, still viable. Still viability in consumer discretionary. ICE, just starting to pull back. Google is embarrassing, isn't it? It's like, come on, you're better than that, Google. Or at least you used to be. Small caps broke the 50. JP Morgan. Testing. But still holding. I like JP Morgan next week if it can hold. You know what, Miguel? You're right. If it wasn't because it's Google. It's for me, it's a staple. It's like I always watch Google. I always watch Apple. I always watch Microsoft. I'll always watch Nvidia. There's just some that are always there. But yeah, I'm in agreement to sideline it. KBH still holding the 50. KKR still holding the 50. Coca-Cola just barely. I mean, Coke looks great. Where I had issued a challenge to consumer discretionary stocks, and they're like, Scott, we're gonna embarrass you, and they did. I adapt. I'm like, great. Let's all be friends again. I'll trade you on these pullbacks. We'll make some money together. We'll all be friends. I'm wondering though if these consumer staple stocks want to revenge trade me. They're like, yeah, we're gonna suck them in, get them in a trade, blast it out, and be like, ha. MasterCard looks great. Where AXP is maybe stumbling, we can easily shift our attention to somebody else. I know, right, Sandy? Uncalled for. McDonald's. Let's see if we have a viable continuation thought process. I kind of think we do. That's something to look at. Meta. Oh, boy. That's a big engulfing candle. The volume is not enormous. I mean, it's above average, but it's not like ridiculous. It's only going to be a little bit above average. It's still at or around the 50. I still think Meta's okay. 3M looks great. Possibly tradable soon. Morgan, I think we have better. It's below the 50. You don't need to settle right now when there's other things that are stronger. Microsoft. I don't know. I feel like Microsoft has just re-entered its own new little mini consolidation. And I would need it to do one of these before I would want to trade it. Head and shoulders on this one. I think the hard thing for me is like it popped up. That was nice. I like that. Then it came down and it like, all right. And then it failed. And it's coming down more. Oh, you're saying a big head and shoulders. Yeah, I'd have to break the neckline with big volume. Certainly that could be the case. I think we would see that more clearly. You can kind of see it there, right? Okay. Micron. I don't like it. I agree. Keep an eye. NASDAQ. Pulling back. Looking strong. Netflix. Still viable. NVIDIA. It's kind of gotten to be too much. Right? It's kind of gotten to be too much here. But PGR looks fantastic. We've got plenty of things that still have strength. So we'll see if this gets worse next week, right? Last year, when we got September weakness, it did get worse. But if you remember last year, it hadn't got, like last year was like only 4% and then another 4%. And then finally it gave us a full 10 and it was a lot more steady. This year it fell harder. So I'm still thinking we we have the ability to stabilize, and this is more of a hiccup. I mean, you can see PLTR. I still feel fine about this. I feel like that just hiccuped a little bit. QQQ, not looking great. It's not fantastic. I recognize that, my friends. RKT, it's hiccuping, but still viable for something to show up. RTX, viable. SPY, our volume is now, with 12 minutes left, we're already above average, so we knew that was coming. TSM, I think chips and tech has some work. I would trade a leader. I would trade an Apple, or I would trade a micro. Well, maybe not. I would trade Apple probably right now. Is the only thing. I don't love the chips right now. Maybe Meta. Do we like Meta? I can't remember now. USB strong enough. I think we have better. The dollar staying fine. The VIX iffy. Walmart. Pulling back, it's strong. I think we have setups in financials. I think we have setups in consumer defensive. I think we have setups in industrials and a little bit in technology and one-offs, but they're one-offs that we know can move by themselves. I still think we're going into next week with an eye on bullish setups. We just need to see this thing stabilize and the buyers start coming back in a little more consistently. So I would say if you're holding a trade and you're like, am I crazy to hold a trade through the weekend? I'd be like, no. I think there's reason to hold through for sure, right? What do you think? That's my assessment. I think we're going to be overall still bullish, but a little bit less so. 4.5. That's my prediction. 4.5. A 3/4 of a point drop. Okay? I think if you're holding trades, that's viable. That still makes sense. That don't think, oh, what am I doing? No. I think that still has a viable path, so to speak. Questions, comments, concerns about market conditions, about preemptive posture scoring, about trading posture, about what you're going to hold through the weekend versus what you're going to sell. Let me know what your thoughts are there. Seems like everybody's feeling pretty good. Yeah. Okay. Any stocks we didn't look at that you want to? Otherwise, I'm going to pop over, talk about the trading plan just a little bit. Overall, okay. Happens, we'll do fine. Perfect. That sounds like the professor is at the computer sending the message. Miguel says, red day, but I'm feeling good. Another professor-esque type of a response. We keep the chimpanzee in the cage. The professor's at the computer. We know the chimp is there. We feel like we know he's shaking the cage. He's making some noises back there. And we're like, okay, relax. We're just going to get to the weekend. He'll fall asleep. Green day after red day yesterday, Sam said. All right, nice work. Right? The question for me always comes down to, are you in control? And sometimes as a blade of grass, all we can do is stand up or duck. Duck, right? But you're still in control. You don't control the market, but you control everything else, including your own emotions. So, right, we end with, are you feeling how you wanted to feel? To some extent. I mean, no one wants to feel the the frustration of a loss because you had to take a loss because the market went down. Of course not. But knowing the context, right? The situational awareness that the professor has, that the chimpanzee sometimes lacks. That's what I'm hearing. So positive outlook, keeping two. Love that. Love that. I mean, at some point you're going to trade. You're not going to be with the group or have the group or whatever the case may be. And this is still what you're going to do as an assessment when you get to Friday afternoon. That's why I like doing this together. This is what I would be doing if I wasn't with you. I'll be watching this thing close. I'll be looking like, okay, what am I going to do? How am I feeling? What am I holding? How am I holding it? Yada, yada, yada. Over and over. What's our trading plan section? Risk management. Remember that the ask, especially if it's your first pass, was that you at least get these first three in. If you've gotten the first three and they all connect, then the next two are together and build off of that. This is a standalone and that builds, and this is the final piece and that builds. So you can think of it in 4 parts. The first 75%, is ABC. The next 15% is E and F. Is E. Let me see. Correlation to market posture. That's the next 10. Tsunami indicator, 10 more, 5 for the other one. So most of the work is A, B, and C. Once you have that, you can get D and E pretty easily. That's another big chunk. Tsunami indicators and hedging, like we talked about the beginning of this session. That's another big chunk. When to take a break, that's pretty easy to define once the rest of that's in place. Yeah, there's videos. They're in the emails. Walking you through what you should be thinking about, how you can be defining and constructing the rules for that aspect of your trading plan. Any questions about that? About any aspect of the risk management section of our trading plan outlines? Let me know if you do have any questions about that. Nothing. Well, all right. Then I'm going to give you a few minutes back to make any final adjustments to your trades that may need to before the market closes. I hope everybody has a great weekend. I will see you Sunday morning, 9 a.m. for me, 11 a.m. for you, late night for Sandy. Have a great weekend. Let's get that trading plan work done for this week if you haven't, so we can move on to section 5. Routines is a big one. It's a good one. Other than that, everyone, happy trading.